and welcome to our session on the Gift City. So the whole purpose of having a session now for the Gift City, because if you look at last 1 year, we have seen that Indian markets are being negative, and a lot of negative news which is happening because of the tariff and all other factors. But what we see now, it is an opportunity to invest in India, because now from a valuation perspective, Indian markets are available below their long-term averages. Secondly, government also has done a lot of measures. If you look at recently, government has done the GST rate cut but during budget they have done for the income tax rate related curve. So we have seen a lot of efforts from the government to increase the overall domestic demand. And apart from that, if you look at the monsoon also being positive, and India as an economy which is more domestic oriented, not export oriented economy. So even the tariff impact, what we see largely will be absorbed over a period of a time. And what we are overall view that I think next 1 month we should see some sort of negotiation happening and things should come back to the normal. So I think one thing what we have learned over a period of a time from the market is that you will not get good news and good price both together. So if there is a bad news, these are the times where you should look at and invest, because if you look at last 1.5 years, NRI, if you look at FIs are continuously selling in the Indian market. So the moment we see that this thing is getting turned, where FI is coming back to India and domestic inflow is already very strong, so we can see that market can move up significantly from here. And why India from an investment perspective? So if you look at the overall nominal GDP growth, what we are expecting it from here, it is going to be very strong. And from a government side also, if you look at, they are doing very aggressively capex. And private sector also, if you look at, they are currently at a very low debt level in terms of their overall balance sheet perspective. So today, private sector also have a huge scope of capital expenditure, and they are sitting on a good healthy balance sheet at this point of a time. And what we are seeing that now, catch up in the rural demand also coming up, and what we see that whatever impact of tariff coming up, India is parallelly working with other countries also, so we can see that there should be some positive thing coming up from other part of the economy. So in our view, I think people who have created a wealth at the time when they invest when there is an uncertainty, and these are the times where we should see, because the base things for, if you look at for India economy, inflation number is very low. If you look at overall revenue from a government perspective, either through direct tax or indirect tax, is at a higher side. Then if you look at the overall growth number also is very strong. So we don't see any sort of long-term challenge from an India growth perspective, and we should see it will help. Now we look at why, what is Gift City. I think Gift City, the whole idea of Gift City, if you look at, it was originated during 2007, and April 2015 we have seen operationally Gift City started in Gujarat. Gujarat. The idea of Gift City is that to create in a special economic zone, a area where it is completely under control of IFSC regulated, and it is be for for global investors, like they are coming to a separate entity. So there is no link in terms of India perspective. If you look at from income tax filing perspective, for Gift City, you don't need your PAN card, you don't need Aadhaar or NRO NRE account. So idea of Gift City is to simplify the whole process of investing, because that's a one thing what we have seen, that most of the time NRIs hassle that they have to go through a lot of processes and they have to do a lot of things. So it has simplified the process of investing through Gift City. And secondly, operational perspective, if you look at a lot of cost side, it has been on lower side, because you don't need to pay a separate tax. Once you pay on a Gift City level, it will be taken care at a fund level. Secondly, TDS are at a very low level compared to the normal investments. And the most important part, if you look at all sort of a government tax, which include GST, stamp duty, security transaction tax, all those will be completely out from the gift city operational perspective. So operationally also it is a lower cost, and the most important part, it can be invested directly into the dollar term. So you don't need to have risk of currency perspective also. So that can be the most important area, because many times NRIs have issue that tomorrow if I need money back, how things will be there, how I'll be able to repatriate, and what will be the dollar terms return for us. So Gift City idea is to create an India centric that is similar to what Dubai, Mauritius, or Singapore has built. So India is trying to build similar thing. It's a free trade zone with a lot of tax incentive for a lot of financial products. So the Gift City, if you look at, is a one point area, the way it is going to build up from an NRI perspective for a lot of products. So it include multiple investment option. So why Gift City? I think as discussed, one is the lower operating cost, because that's the most important part. If you look at, because all those government tax are not applicable for Gift City. Second, competitive taxism. So if you look at on the Gift City level, investor don't need to pay tax separately. So fund tax will be taken care at a fund level. Even for dividend, for example, for NRI normally, where they pay on the highest rate, here at a 10% they have to pay for TDS. Same way, if you look at on the bonds which are listed in the Gift City, the tax is around 9% plus surcharge and other things. So if you look at compared to doing a normal investments, Gift City taxation is more competitive. Second thing, engagement with unified financial regulators. So you don't need to overthink about FEMA regulation violation or any sort of Indian regulation, because it is considered as a separate entity which is not have any sort of a link with India, even it is situated in the India. So IFSC, which is a global entity which regulate, it will be the regulatory part. So, and the most important part, if you look at it is creating an ecosystem where it can be helpful to manage multiple time of investments, and there is no any sort of a limit in terms of investment perspective. So that give a complete edge and access to investor to look at from an investment perspective for the long term. If you look at what are the key features of Gift City, I think the most important part, it is regulated under the global, so International Finance Services Center (IFSCA), which is a single window clearance, plug and play environment, and a lot of tax benefit. World class infrastructure. So if you look at the way Gift City is built up, it is a completely keeping into the mind the global infra and the global partnership. So most of the global players, if you look at today, have done the setup in the Gift City, and the focus is how we can build a more sustainable thing. So if you look at Gift City is becoming as a hub for domestic and international business. So if you look at, be it a banking, insurance, capital market, leasing and financial, fintech, AIF, foreign industries, or ancillary services. So Gift City is not just about investing into the Indian market only. If you look at today, the products on the insurance side available on the dollar terms, you can do investments in a dollar terms for FD and other things through Gift City. Then you can invest in capital market through PMS, AIF, mutual funds, and other thing through Gift City, and all other things. So the idea of Gift City is to build a whole complete ecosystem which can be helpful for investment of any sort of asset class. And if you look at the overall ranking from an India perspective, where we look at that why India is going to do well. So if you look at, except last one financial year, if you look at the over a period of a time, India always been in a top quartile on the overall perspective, even in the dollar terms allocation perspective. So overall, what view is that I think we should not worry about the short term volatility what we are seeing, because in a long term perspective, I think the way India is growing, it should do very well. And we have seen the sectors like, for example, defense. If you look at, nobody thought of like 10 years before India will be dominant player on the defense side. So a lot of sectors, even on the manufacturing side also, India is becoming a major hub. If you look at like a mobile phone today, India is a globally one of the largest player on the mobile phone production perspective. Earlier we used to import significantly. So from a policies perspective also, government is very clear. They wants to make sure that India dependency on the global market should come down, and we should be self sufficient. I think that is something which can change, because there are very few market, if you look at globally, which have a very strong scope for internal consumption plus export also. So that's a one thing which it can make India much ahead compared to other on a sustainable basis. So that's a one thing where we see India should do very well on a long term perspective. So if you look at Gift City compared to the other global financial hub, so if you look at predominantly Singapore, Dubai, Hong Kong, and London, these are the four key financial hub. If you look at, so if you look at India, Gift City today are comparatively in a same level where globally all those alternative markets are there. So if you look at that way, the way developments are happening on the Gift City side, the way we are seeing every month there are multiple products which are coming up on the Gift City investment option, so which is going to make future destination for the NRI for the investments from an India perspective. So why Gift City is a better option than going directly routed? So I think one of the most important part, if you look at, it's a regulated on the global side, so you don't have any sort of a risk in terms of repatriation perspective, India filing, and all sort of a documentary thing. Secondly, on the tax perspective, the capital gain, all STT and all other things are not been there as a significant part, because it will be on a lower end even at source level. Second, it's a world class infrastructure in terms of managing the business, so it always makes sense. Even somebody need any sort of a help, it can be managed predominantly at a first level. Secondly, it's located on a key market where if it's between Ahmedabad and Gandhinagar, and focus is primarily on financial services as a whole. What are the different investments option if you look at on the Gift City perspective which are available? I think that's the most important part. And next part, I'll take even some of the options which we are suggesting in the Gift City side. So AIF and PMS, global and domestic equities, bonds and debentures, term deposits, REITs, or equity investment in startups. So these are the key things which today, as an investment perspective on the Gift City side, is available. One of the major drawback, if you look at on the Gift City side, the limitation. So 1.5 lakh USD is the minimum for most of the products. But what we are seeing that slowly, there also we are seeing a lot of new funds and option which going to come, and where the limit will come down. So key benefits perspective, I think the concessional rate on the dividend and income, exemption on the capital gain tax, because fund level it will take care the tax, currency flexibility because investment will be in the foreign currencies without converting into the INR, ease of investments because it's a digital onboarding and KYC process, so no need to go through multiple things. The minimum investment part is 1.5 lakh USD, which I think over a period of a time as market expand, I think there also we should see flexibility coming up. And which are the different funds today available on the Gift City side? So if you look at 361 have a one Aditya Bill Alternatives, they have Alchemy, Ambit. So if you look at on the overall perspective, we have seen multiple option which is coming up on the Gift City side. But the most important part as the individual, we have to look at what is the purpose for which we are doing an investment, because most of the investment idea is looking at from a 3 to 5 year perspective. Secondly, one of the question always come up for any individual that okay, today if I'm starting investment through Gift City, and tomorrow if I return back to India and I convert as a resident Indian, then what is going to happen to my investment? So because as investments are through gift city and everything will be taken care at a fund level, so when you are changing your status, you can get your funds back to your account, and you can start normally as an investment. So there is no any sort of a risk in terms of getting your investment impacted from a long term perspective. So you can continue to hold your investment through gift city till the time you are NRI. As your status change, then you can convert your investments also. Second thing, which always we have seen in the long term perspective, where rupee is depreciating again, dollar and other etc. So that also give a edge because the investments will be done in the terms of the dollar term. So you get the benefit of the currency. So on an average, we have seen 2 to 3% additional return because of the currency benefit perspective. The third thing, I think the most important part, you have a lot of options through Gift City today. So even somebody wants to do FD, also FCNR FD type of an investment option also can be done through Gift City. You can invest into the bonds. You can invest into real estate funds also, which is coming up through Gift City. Then there are options on the long short funds and the pure equity funds. At this point of a time, what we see that I think the best option will be on the equity side. So two of the fund, I'll not take much of a time, but we'll just give a short brief, which we are suggesting on the gift city side. One is the Carnelian fund. So because all views that I think the flexi cap approach, where funds which are focused predominantly towards investing into sectors which are going to do well. So predominantly manufacturing, digital, financial sectors. These are the things which we see continuously to do well. And overall, our view is that in a long term, India should do very well on across on a flexi cap approach. So these are the some of the allocations at a fund level they have done and how they're able to perform. So if you look at financials, IT, consumer, discretionary, and industrial, and how as a fund level able to identify those things at an early stage, which help in terms of the overall return perspective. It has done very well across different time frame perspective also. And if you look at the fund structure perspective, investment amount here it is showing 5 lakh USD, but from an individual perspective, it will be 1.5 lakh USD because 5 lakh USD for the fund, because for an investor, it is 1.5 lakh USD. And the structure will be more open ended USD denomination, which give complete benefit in terms of tomorrow when clients need money back, also he can take it back. The most important part, taxation will be taken care at a fund level, so you don't need to worry on the tax paying at a later part. And as an investor perspective, it will be completely tax free in his hand. And if you look at the overall fund performance and a long-term perspective, it has done phenomenally well. Even a time where markets are down, fund is able to deliver well in a longer-term perspective. So our idea is that in India also today, on a long-term perspective, we have a lot of good options which can able to deliver good performance even in the dollar terms also in the long run perspective. The second fund, what we are suggesting currently on the Motilal founder strategy, again it is on the multi-cap focused predominantly, and the idea is to buy good quality companies which have a profitability of 100 crore plus with ROC about 15% plus, and looking at to have earning growth higher than the benchmark. So this is the overall strategy as a fund level what they hold. And if you look at, this is the allocation of the fund. So predominantly if you look at, it will have a mix of large, mid and small cap, wherein 20% currently on the large cap, and 40% on a mid and small cap. So based on the performance where the long term growth is strong, fund is look at. And if you look at inception return, a fund is able to deliver good performance even where we have seen short term perspective there is a negative yield, but if you look at on a longer term perspective, it is able to build a good wealth. And we see these type of a fund should continue to do well because in a long run, if you look at, I think flexi cap approach is ideal than looking at more large cap oriented, because mid and small cap is a segment where most of the time where we see a higher growth coming up. So who can invest whatever regulatory perspective things are there, and what is the risk associate on the investment in gift city perspective. So I think if you look at the way the gift city structure is built, it makes sure that there is no any sort of a risk come from an investment perspective, because everything is regulated by the global regulator perspective. And secondly, it does not have any sort of a link with Indian market, so you don't need to worry about any sort of a KYC compliance or anything linked to the India, because uh, there is no need of a PAN, Aadhaar, income tax return filing in India, NRO, NRE account, or even any sort of a documentary things to be rooted. So even it is a part of India, but from an investment perspective, it is not considered as an Indian holding. So that's the one thing which give a benefit. Second thing, because investments are in dollar terms, so that give a ease of the currency fluctuation risk. Third most important part, the remittance perspective. Tomorrow, if you need money on the global side, predominantly, like for example, for a kid's education perspective or any other area, even you want to retire in the global part, not to India. So you able to invest in India, take the benefit of all the growth, but continue to enjoy the benefit in the dollar terms in terms of the return also. And secondly, the ease of the process, because the whole process is completely online and KYC and other thing, which give us the comfort that tomorrow you don't need to worry about operational process perspective. So I think gift city, if you look at is going to become as a major chunk of the investment allocation. The only drawback perspective, if you look at the minimum investment amount, which is 1.5 lakh USD for most of the products. So there are products which are going to come for the lower side, but I think at this point of a time, most of the investment options, what we are suggesting, 1.5 lakh USD is the limit. I think that's the only area where we see things need to be worked on, which I think over a period of a time it will work. And secondly, on the investment option side, so today still it is at a development stage. So still not all of the fund house are having funds on the gift city side. But I think the way we are seeing the fund level launches and the way demand is coming up, I think in next 1 or 2 years you will see everybody will be on a gift city side. Even now, mutual fund houses also started funds on the gift city. So DSP has launched, Parag Parikh has launched, Mire mutual fund has launched. So a lot of mutual fund houses also going aggressively and launching fund, even with the lower denomination also. So we are seeing that it is taking a building a traction, and it is becoming as a major thing. And it is a good way of investing even for the foreign currency deposit and the banking perspective, because you can open a gift city bank account and you will have a ease of transaction without any sort of a limit, because whenever you do FCNR deposit you have a time limit that minimum 1 year you have to hold. So in gift city deposit you will not have that type of a risk. So even banks like ICICI Bank, SBI, SDFC, they also have gift city bank account option also. So that also is a good thing what as an individual can look at. And the most important part, I think, on the tax part, because for dividend or interest, the tax TDS is at a very lower end, 9 to 10%, and for the capital gain, it is at a fund level, so no need to pay separate tax. So I think that's all from my side in terms of the overall gift city options perspective. And two options what we are recommending, that also I've taken you through. One is Carnelian Amrit Kal Fund, which is more focused from a 5 to 10 year perspective, multi-year growth, flexi cap approach perspective. And the second fund, Motilal Founder Strategy, again focus more flexi cap approach from a long-term perspective, because all views that at this point of a time, equity should do well from a next 2 to 3 year perspective. And with festival demand also coming up, we see that the quarterly result also should do overall level, it should be on the upper end. That's all from my side. Thank you.